Okay, perfect. Okay, so hello and thank you for joining the webinar today. My name is Erika Lambert-Shelton, and I am the Senior Financial Aid Advisor slash Outreach Lead here at Palo Alto University. And I am doing a webinar series from now until the end of the academic year on different financial literacy topics to help educate the students and just to keep you all informed. So today we will be talking about smart borrowing and loan repayment, making informed loan decisions for graduate and professional programs. So there are some major changes coming to the Graduate Plus loan. In every webinar, I'm going to talk about these major changes because this is one of the specific reasons as to why we are hosting this webinar series. And so starting July 1st, 2026, new borrowers will no longer be eligible to take out the Graduate Plus loan. And there will be new borrowing caps for graduate and professional students. So if you were already enrolled and have borrowed Graduate Plus loan prior to July 1st, 2026, you will be grandfathered into the program. Only students continuing a current program and have borrowed Graduate Plus loan before July 1st, 2026 will be able to continue to borrow for up to 3 years or until the completion of your program, whichever may come first. Now, regular master students will still be capped at 20,500. So when we say regular master students, we're talking about our master's in counseling, MSW program, and master's in psychology. Those caps will remain the same for 20,500 and unsubsidized loan for the full academic year. And then if you are a professional slash doctoral student, which would be either the PhD program or the PsyD program, since Graduate Plus loan will not be available to you, then that borrowing cap has actually increased at $50,000. Okay, so just kind of recapping. Current students that are already receiving Graduate Plus aid will continue to receive Graduate Plus loans for the next 3 years or until program completion. So you will be grandfathered into the program. Starting July 1st, 2026, the Graduate Plus loan will be eliminated. So any new student or new borrower entering a professional or doctoral program will not be eligible to receive Graduate Plus loan. However, their unsubsidized loan amount will increase to $50,000. And then our regular master students, so we're talking MA counseling, masters in social work, and MS psychology, those loan amounts stay the same at 20,500. So now we'll just get into what is smart borrowing. So smart borrowing is making informed strategic decisions about taking on student debt, focusing on only borrowing what is needed, not really doing too much like exceeding that budget, right? Understanding loan terms such as your interest and what it means for repayment, and then choosing affordable options if applicable. So you want to look at your grants and your scholarships first before deciding on taking out a large amount of loans. And then you want to compare all the different loan types. And you want to be planning for manageable repayment to avoid overborrowing and future financial strain. So graduate student borrowing basics, graduate students borrow at a higher cost of attendance because the program is just a little bit more expensive and they have to account for living expenses a lot of times. So there are greater borrowing limits as a graduate student, and then your repayment, there are longer repayment times when you tend to borrow more funds than needed. So now I'm just going to discuss some different types of federal aid so we kind of all have an understanding of what that looks like. So you have your direct subsidized loan. So this is a loan that's going to be issued by the Department of Education, and the subsidized loan is based on financial need. That financial need comes from filling out the FAFSA form when it asks you those income questions. Now, for a subsidized loan, interest does not accrue on this loan while you're in school. And for a subsidized loan, only undergraduate students are eligible to receive the subsidized loan. And then you have your direct unsubsidized loan. still also issued by the Department of Education, but this loan is not based on financial need, and it is available to both undergraduates and graduate students. Now, with the unsubsidized loan, interest will accrue on this loan while you're in school and during your grace period. For the subsidized loan, interest does not accrue. The government is supposed to pay the interest on the subsidized loan while you're in school and during your grace period. And then you're going to have your direct plus loans, so your parent plus loans and your graduate plus loans. And these are going to be eligible for parents of undergraduate students or a graduate or professional students, such as our PhD. You must not have any adverse credit history. A credit check will be done. And then the maximum amount of plus loan that you can receive is going to be up to your cost of attendance minus any other financial aid that you have already received. So interest still accrues on the loan, even if you are not making payments. Once the loan goes into repayment status, you will be responsible for any of the outstanding interest, and it will be added on to the principal balance of your loan if you have not made any interest payments towards your loan as of that. This is called interest capitalization. So if you are able to make interest-only payments on your loans, I always advise students to go ahead and do so because it will cut down the amount of interest that has accrued, as well as taking down some of that principal balance of the loan. The graduate plus loan credit is based off of what you can borrow, and as I mentioned, it's based off of credit, as well as the maximum amount that you can receive is going to be up to your cost of attendance, and it does have a higher interest rate and fees. There are then also alternate loan funding options such as the private loans. So our big three heavy hitters that a lot of students do take out for private loans is going to be Sallie Mae, SoFi, and College Avenue. So if you are unable to receive federal aid, you can apply for a private loan through one of our PAU preferred lenders, and you can contact the Office of Financial Aid. We can give you that link. However, when you take out a private loan, the credit is hit a little bit harder than when you try to take out a graduate plus loan. So it may require strong credit and it also may require a cosigner. So you may get denied for a private loan, but it may say denied, but reapply again with cosigner. With the private loan, they're going to be variable and fixed interest rates. It just really all depends. Everything's based off of credit. The better your credit is, the better rate that you'll receive. And there are limited repayment options when it does come to taking out a private loan. However, because of the Grad Plus loan going away effective July 1st, 2026, a lot of the private loan lenders are trying to align themselves with federal aid to allow more options for repayment, to allow more options for students to receive a loan to be able to pay for their education. And in the event that you would need a cosigner, for example, like SoFi lending, they have it where the cosigner can drop off within a year's time after that loan has been certified and processed. Any other questions that you may have regarding private loans, you can always contact me at the financial aid office. So before you borrow, you're going to only borrow what you need. Okay. I know that's easier said than done because a lot of us are going to borrow a little bit more because we need things for cost of living. But see, that's the thing. We need to make sure that we are budgeting because we don't want to be in some outrageous loan debt and then once we graduate, not able to pay it out. Not able to pay back that amount. So just only borrow what you need. But also, like I said, account for living expenses if you do not plan to work a full-time job while you're in school. If you don't plan to work a full-time job, there's also part-time work available through work study positions. You want to understand your total debt before graduation and plan for repayment early. Before you borrow, you also want to attend any financial literacy sessions that the Office of Financial Aid is hosting. Schedule a one-on-one appointment with me to go over your total loan balance. I can pull up your total loan balance and we can talk about how that looks for you in the future and how the loan repayment will work. You want to estimate your monthly payments and understand repayment start timelines and consider what your future salary expectations are. Be realistic. If you're somebody that's getting ready to graduate with your master's, you need to be looking at what type of options these employers are giving these newly graduate students to be able to pay off the loan. So now let's talk about the repayment options. So when you first graduate from the university and you have went through your 6 month grace period, because everyone gets a 6 month, you graduate, you'll get on a 6 month grace period. During the 6 month grace period, no payments are still required, but interest is still accruing on your loan. Once you have exhausted your 6 month grace period, the loans will automatically go into repayment. If you make no changes, your loan servicer will automatically place you on a standard repayment plan. What does that look like? A standard repayment plan is going to be the largest payment amount, and the goal is to make sure that the loan is paid off within 10 years. So, this is a very large payment that you may or may not be able to afford. However, if you can't afford the standard repayment amount, there are lots of different options that you can choose from. So there is a graduated repayment plan if standard repayment doesn't work. And the graduated repayment plan just basically means that payments will gradually increase every 2 years until the loan is paid off. So they'll start off small and then they'll gradually increase. Now they're going to be increasing a lot because the goal is still to pay the loan off within 10 years. And then you're going to have your extended repayment options. So this is going to extend out the life of your loan for up to 25 years. And there's also options for a graduated repayment plan on this option as well. However, you do have to have at least $30,000 of student loan debt to use this plan. Anytime that you want to make a change to your payment, you're going to contact your loan servicer. The loan servicer is a federal contractor under the Department of Education to service your student loans. They are there to help you. They're not there to hurt you or harm you. Anytime that you get a call from them, it's not trying to like harass or anything like that. They're legit trying to just help you make sure that your loans stay within current standing. And you can contact the loan servicer at any time to make changes to your loans if you cannot make any payments. They have all the applications that are required for you to make sure that these loan payments stay affordable for you. The next options are going to be your income-driven repayment plans. So right now, some of the plans are possibly going to be going away, but here are the current ones that are still in operation as of right now. Repay as you earn, pay as you earn, income-based repayment, and then income contingent. So pay as you earn and repay as you earn takes into consideration 10% of your discretionary income. Income-based repayment takes into consideration 15% of your income. And then income contingent takes into consideration 20% of your discretionary income. So anything on income contingent will be a little bit of a higher payment. Now, all of the IDR plans are based off of your loan debt, family size, and your adjusted gross income. Documentation is required as well as annual recertification. So this is documentation that you'll need to provide the loan servicer annually. And you'll, for proof of income, you can either provide your most recent paycheck stubs or tax returns. Like I mentioned, some of these plans may be phasing out as of July 1st, 2026. I believe like income-based, income contingent. But if you're currently already on these plans, you will be grandfathered into that program. The plan will then be called repayment assistance. There's still not a lot of information out yet on that because no one's on those plans yet. These are just still things that they say that they're going to be making changes, but we won't see anybody on these new changes until July 1st, 2026. However, either way, federal loan repayment options, just contact the loan servicer if you need any type of help with making your payments, and they will do everything that they can for you to help you because not only do they have income-driven repayment plans, but you can also look into getting forbearances and deferments, which are also temporary suspension of payments if you need help with making payments and things like that. And those forbearances and deferments can allow your account to remain in current standing and not go into like default or anything like that. Now, public service loan forgiveness. A lot of people they want to, get into public service loan forgiveness. And so with that, it requires 120 qualifying payments on a qualifying repayment plan. You have to be working in the public service sector, nonprofit for 10 years. Now, this does not mean that you have to work at the same company for 10 years, but you do need to be in the nonprofit sector for 10 years. Annual employment certification is required every year to make sure that your organization is still considered a public service. And a qualifying repayment plan is going to be one of the income-driven repayment plans. The loan servicer will be calculating what payments qualify and what payments do not. You do have to make on-time monthly payments. So you couldn't just send in a bulk lump sum of 120 payments of one time. You really actually have to make, even if your payment is only $5, you have to make that payment every month on time on the due date. Um, this program is still into place. However, because it is a government program, at any time it can be removed. As of right now, no changes really have been made to public service loan forgiveness, except for some employers that were public service organizations. Now some are now being deemed not public service organizations. So when you do get a job, you just want to make sure that they are. To make sure that your organization is public service, you want to make sure that they file as a 501(c)(3) organization. Okay, so here are just some tips for success. So you want to make interest-only payments while you're in school and during your grace period. Now, this is only if you are able to, because I understand that obviously you're in school, you may not be working, there may not be additional funds to make towards the loan payment. But if you don't want that interest to capitalize and be added into the principal balance, if you can, make small payments here and there towards the interest. The loan servicers have an option where you can enroll in auto debit and you can receive a 0.25% interest rate reduction. You want to review your payment plans periodically. You want to make sure that you borrow intentionally and stay within your budget. Understand all the different type of loans that you have and the repayment options. Plan ahead for success and continue to stay in contact with your loan servicer. You can also go to studentaid.gov. They have that's a very, very good resource for you. They have what they call a loan simulator. So what you'll do is put in all of your information. It already shows your loan debt. So you'll put in your family size, your income, and all the different repayment plans will come up for you. And then you can then decide what's the best option for you. And that was really the end of the presentation. It was actually pretty quick, but I will take questions now if you all have any. Okay, we have some questions here in the chat. Oh, you just said thank you for the information. Okay, perfect. I'm glad I was able to provide this information for you. And at any time, you can always schedule a one-on-one appointment with me if you want to go a little bit more in depth. Any other questions for the time being?
I came in late, so I might have missed something at the beginning. But I was wondering if you have any information on if we haven't taken out a loan yet, if we how to get grandfathered into like the grad plus loans and the like not having I forget what the limit is on annual borrowing that are gonna start in I think June or July of this year.
Yes. So that was something that I mentioned at the very, very beginning. The reason why we're putting on these webinar sessions is because of the changes that are happening to federal student aid. So with the Graduate Plus loan will be eliminated starting July 1, 2026 for new borrowers or new students entering a graduate program. If you are currently enrolled in school and you are currently have already taken our Graduate Plus loan, you will be grandfathered into the program. It's supposed to be an automatic thing. Now, how that actually looks when we start processing your aid for the fall, I really don't know, but if you have already received Graduate Plus loan, you will still be able to continue to receive it for 3 years or up until your program completion. So this new change is going to affect new borrowers or new students entering into specifically a graduate program starting on or after July 1, 2026. So say for instance, you're a new student or you know someone and they're starting a graduate program July 1, 2026, and this is a new program, they will not be eligible for Graduate Plus loan. So for them, what will happen depending on how they are classified, if they are a master's level student, master's here at PAU, we got MA counseling, master's in social work, and MS psychology. Those degree programs loan limit will remain the same as it always has been at the maximum amount of 20,500 for unsubsidized aid. And then unsubsidized is the only type of loan that graduate students are eligible for because it is not based off of need. If you are a graduate or professional student, so that means that you are either a PhD or a PsyD student, but you are new coming in July 1, 2026. Your borrowing limits for the unsubsidized loan will then increase to $50,000 per year. Now, if you're grandfathered into the Graduate Plus loan program, your loan amounts for the unsubsidized will stay the same, which currently right now is 33,000 for a PhD and PsyD students. Um, so it's only for new students coming in or people who have never taken out Grad Plus. Currently, right now, if you are a graduate student who has never taken out Graduate Plus at the current moment, but then you may be interested in looking into Graduate Plus loan in the future, I am advising students to take out a small portion of Graduate Plus loan now so that way they can still be grandfathered into the program if you don't have Grad Plus loan already. Because keep in mind, majority of the students who take out Grad Plus loan is covering their living expenses. They need the extra funds to cover their living expenses. So if you are a current student and you're working on your master's or your PhD and you do not have Grad Plus loan at the moment, there's still time for you to get Grad Plus. Just take out a small amount and then you will still then be grandfathered into the program. I hope that answers your question.
Yeah, that's super helpful. Thank you so much.
You're welcome. Anything else? I know it's a lot of information. That's why we're doing these webinars once a month to just pretty much keep reiterating what is happening. And the more we find out, the more we'll be able to inform you all. Perfect. All right. So if that is everything, I'm just gonna take guys' names down really fast. That I see on here. And thank you so much for joining and taking your time out of your day to come chat with me. So have a good rest of your day. Bye-bye.
Thank
Thank you
you.
again. Really appreciate it.
Really appreciate it.
You
You're
take
welcome.
care.
Okay, bye-bye.